Anticipated 25% revenue increase across healthcare, retail, education, and logistics by Q4 2025. Competitive dynamics and strategic responses. Overview. As we approach Q4 of 2025, projections indicate a robust 25% increase in revenue across four pivotal sectors: healthcare, retail, education, and logistics. This anticipated growth is primarily driven by evolving consumer behaviors, advancements in technology, and strategic adaptations by major global players. The post-pandemic recovery phase has catalyzed this trajectory, which is shaped by several interrelated factors and competitive dynamics. Sector analysis. 1. Healthcare sector. The healthcare sector is undergoing significant transformation driven by urgent financial imperatives and the integration of advanced technologies. A recent report indicates an expected 8% increase in net hospital operating revenue compared to the previous year, with median net operating margin showing improvement from 2.3% to 4.3%. However, challenges persist, particularly as rising costs outstrip reimbursement rates, especially in labor. Key trends and challenges. Shift to outpatient services. There is a marked shift towards outpatient services and virtual care, with outpatient services projected to grow by 17% over the next decade. The adoption of telehealth is also expected to drive significant patient volume growth. Financial assistance programs. The demand for financial assistance programs is escalating as many patients are confronted with substantial out-of-pocket expenses, necessitating innovative financial solutions from healthcare providers. Technological integration. The emphasis on technology integration is paramount, with investments in process automation, artificial intelligence, AI, and digital payments becoming increasingly critical for improving operational efficiency and patient experience. 2. Retail sector. The retail industry is experiencing a digital transformation that has shifted the focus from supply-driven models to personalized, data-driven consumer interactions. Retail executives predict mid-single-digit growth in 2025, driven by enhancements in loyalty programs, omnichannel capabilities, and the integration of AI for inventory management and demand forecasting. Key trends and challenges. Consumer behavior shifts. Today's consumers are more diverse and value-driven, often opting for affordable brands and discount retailers, leading to a loyalty crisis where price is prioritized over brand loyalty. Technology adoption. Retailers are increasingly leveraging AI and machine learning to enhance customer engagement and create frictionless shopping experiences. Many anticipate implementing AI capabilities to personalize consumer interactions by 2025. Operational challenges. Despite the positive outlook, retailers face challenges from outdated systems and rising operational costs, necessitating strategic investments in technology and workforce readiness. 3. Logistics sector. The logistics market is projected to expand from $301.1 billion in 2024 to $557.1 billion by 2030, driven by the rapid growth of e-commerce and the increasing demand for advanced logistics services. Key players are adopting innovative technologies, including automation and last-mile delivery solutions, to improve operational efficiency. Key trends and challenges. E-commerce growth. The surge in e-commerce is reshaping logistics as retailers seek seamless shopping experiences that align with consumer expectations for quick and efficient delivery options. Omnichannel retailing. The rise of omnichannel retailing is creating new opportunities for logistics providers as they adapt to the complexities of managing multiple distribution channels. Technology integration. Investments in advanced logistics technologies are essential for meeting the demands of modern consumers and ensuring operational effectiveness. 4. Education sector. While specific projections for the education sector were less prominent in recent analyses, it is evident that the need for digital transformation and personalized learning experiences is critical. The sector is likely to benefit from technological advancements similar to those observed in retail and healthcare. Key trends and challenges. Digital learning. the push for digital learning environments and personalized educational experiences is gaining momentum, driven by technological advancements. Financial pressures. Educational institutions are facing financial pressures that necessitate innovative funding models and strategic partnerships to sustain growth. Common themes across sectors. Across these sectors, a few recurring themes emerge. Technology integration. The integration of technology, particularly AI and automation, is crucial for enhancing consumer experiences and driving revenue growth. Companies that successfully leverage data analytics and digital tools are likely to gain a competitive edge. Consumer-centric strategies, emphasizing consumer experiences, whether through personalized interactions or efficient service delivery, is vital for fostering loyalty and driving revenue growth. Operational cost pressures. All sectors are grappling with the impact of rising operational costs and the need for strategic investments to modernize and adapt to changing consumer expectations. Competitive responses. Major global players. 5 major global players are likely to respond strategically to the anticipated growth in these sectors. 1. Healthcare providers. Leading healthcare organizations are expected to enhance their service offerings through telehealth expansion, improved financial assistance programs, and technological upgrades to streamline operations. 2. Retail giants. Major retailers are investing in AI and digital commerce capabilities to create personalized shopping experiences, enhance loyalty programs, and streamline supply chain operations. 3. Logistics companies. Key logistics players are focusing on automating processes and expanding last-mile delivery services to meet the growing demands of e-commerce. For education institutions, educational organizations are likely to invest in digital tools and platforms to improve learning outcomes and enhance student engagement. 5. Tech firms. Technology companies are poised to play a critical role by providing innovative solutions that facilitate the digital transformation of these sectors. Conclusion. The projected revenue growth across healthcare, retail, education, and logistics by Q4 2025 reflects a complex interplay of technological integration, evolving consumer expectations, and the necessity for strategic adaptations. While challenges remain, particularly regarding operational costs and outdated systems, the emphasis on innovation and consumer-centric strategies is expected to drive significant growth in the coming years. As these sectors navigate the complexities of the post-pandemic landscape, the successful integration of technology and a focus on enhancing consumer experiences will be paramount for sustaining growth and competitiveness. The anticipated 25% revenue increase across healthcare, retail, education, and logistics sectors by Q4 2025 is based on several key factors which may contain counterintuitive insights. 1. Healthcare sector. One might expect that rising costs in healthcare would lead to decreased revenues. However, the projected 8% increase in net hospital operating revenue and improved median operating margins from 2.3% to 4.3% suggests that the industry is adapting successfully. The counterintuitive aspect here is that while costs are rising, the shift towards outpatient services and virtual care is driving growth, indicating a transformation in service delivery rather than a decline in consumer spending on healthcare. 2. Retail sector. The shift from supply-driven to personalized, data-driven approaches reflects a significant transformation in consumer behavior. A common assumption might be that consumers are less willing to spend in a high-inflation environment. Yet the expectation of mid-single-digit growth in retail suggests that consumers are seeking experiences and engagement even while they prioritize price and value. Retailers focusing on loyalty programs and omnichannel experiences showcase that investment in customer experience can lead to revenue growth, contradicting the notion that cost-cutting is always the path to profitability. 3. Logistics sector. The rapid growth of the logistics market, projected to reach $557.1 billion by 2030, runs contrary to the typical expectation that economic downturns would hinder logistics growth. Instead, the e-commerce boom and the demand for advanced logistics solutions illustrate that consumer behavior is adapting to prioritize convenience and speed. Driving investment in logistics infrastructure. The implication here is that sectors traditionally seen as back-end support are now frontline growth drivers due to changing consumer expectations. For education sector, while the education sector is often viewed as a stable but slow-growing field, the call for digital transformation and personalized learning experiences indicates a shift towards a more dynamic model. The counterintuitive element is that the demand for tailored education solutions is rising, suggesting that educational institutions must innovate to remain relevant and financially viable in a competitive landscape. 5. Common themes across sectors. The integration of technology, particularly AI and automation, is seen as a critical enabler for growth across all sectors. One might assume that the complexity and costs associated with technology adoption would deter businesses. However, the evidence suggests that strategic investments in technology are expected to yield significant returns, thereby enhancing operational efficiency and consumer engagement. Companies that embrace these technologies are likely to outperform their peers, contradicting the belief that traditional methods are sufficient for sustained success. 6. Rising operational costs. All sectors face rising operational costs, which is typically viewed as a negative indicator for profitability. However, the emphasis on strategic investments to modernize operations and adapt to consumer preferences suggests that companies are finding ways to turn these challenges into opportunities for growth. The expectation that AI can assist in managing these costs through better demand forecasting and inventory management further illustrates a proactive rather than reactive approach to rising expenses. 7. Consumer behavior trends. The retail sector's move toward value-driven purchasing behavior, where price often trumps brand loyalty, may suggest a crisis of loyalty. Yet the data indicates that consumers are willing to engage with brands that offer personalized experiences, even if they prioritize lower costs. This reflects a nuanced understanding of consumer loyalty, a recognition that loyalty can be transactional rather than emotional in a cost-sensitive environment. In conclusion, while the anticipated revenue growth across these sectors is built on foundational trends such as technological integration and evolving consumer preferences, several counterintuitive insights emerge. Companies that recognize and adapt to these dynamics, leveraging technology to enhance customer experience and operational efficiency, are positioned to thrive despite the challenges posed by rising costs and changing market conditions. The expectation of growth in traditionally stable sectors like healthcare and education further underscores the necessity for innovation and adaptability in the face of evolving consumer demands. The report projects a significant 25% revenue increase across the healthcare, retail, education, and logistics sectors by Q4 2025. While the report highlights various growth drivers, several important details are often overlooked, which can have profound implications for stakeholders. 1. Healthcare sector dynamics, financial health versus patient affordability. A crucial aspect that may be overlooked is the dual pressure on healthcare systems to improve financial health while enhancing patient affordability. The projected increase in net hospital operating revenue by 8% is encouraging, but the report highlights that rising operational costs, particularly labor, are outpacing reimbursement rates. This gap signifies a structural challenge that could lead to a divergence in the financial health of healthcare organizations. Significance. The emphasis on patient affordability indicates a looming crisis where many patients face significant out-of-pocket expenses. If healthcare providers do not address financial assistance programs adequately, they risk alienating a substantial portion of their patient base, which might lead to delayed care or avoidance altogether. This could exacerbate health disparities, particularly among low-income populations, impacting revenue long-term. 2. Retail sector, the loyalty crisis. Another often overlooked detail is the evolving consumer behavior in the retail sector, particularly regarding brand loyalty. The report notes that nearly 60% of retail executives anticipate consumers will prioritize price over loyalty in the coming year. This shift reflects a broader trend of consumers seeking value, which may disrupt long-standing brand relationships. Significance. retailers must adapt their strategies to cultivate loyalty amidst price sensitivity. This could involve leveraging data-driven insights to enhance personalization in marketing and customer interaction. Failure to respond to this loyalty crisis could lead to a loss of market share to competitors that better cater to the value-seeking consumer, making it imperative for retailers to innovate their loyalty programs. 3. Logistics sector, the last-mile delivery challenge. The logistics sector's growth projected to reach $557.1 billion by 2030 is underpinned by e-commerce expansion and the demand for advanced logistics services. However, the report stresses that last-mile delivery remains a significant challenge. Many logistics providers are investing in automation and innovative solutions to enhance operational efficiency. Significance: the focus on last-mile delivery is critical because it directly affects customer satisfaction. As consumer expectations for fast and reliable delivery rise, logistics companies that fail to optimize this aspect of their service may struggle to retain customers. This is particularly poignant as e-commerce continues to grow, making the ability to provide a seamless last-mile experience a competitive differentiator. 4. Education sector, the need for digital transformation. While the report provides less detail on the education sector, it emphasizes the necessity for digital transformation and personalized learning experiences. The integration of technology in education is essential to meet diverse student needs. Significance: the education sector must prioritize technological investments to keep pace with other sectors. Institutions that lag in digital transformation may find it challenging to attract and retain students, especially as younger generations become accustomed to personalized and interactive learning environments. This could result in declining enrollment and revenue, highlighting the urgency for educational institutions to innovate. 5. Cross-sectoral themes, technology integration and consumer experience. A recurring theme across all sectors is the integration of technology, particularly AI and automation, to enhance consumer experience and operational efficiency. While this is noted in the report, the extent of its implications may not be fully appreciated. Significance: companies that can effectively leverage technology to personalize consumer interactions and streamline operations will likely emerge as leaders in their respective fields. The potential for AI to enhance demand forecasting and inventory management in retail, for example, could lead to significant competitive advantages. However, the reliance on outdated systems can hinder progress, and organizations must prioritize modernizing their infrastructures to harness these benefits. 6. Economic pressures and operational costs. The report mentions rising operational costs as a challenge across sectors, which can be easy to overlook but is critical for strategic planning. As companies navigate economic pressures, understanding the interplay between cost management and revenue growth is essential. Significance: organizations that proactively address cost structures through strategic investments in technology and process optimization will be better positioned to thrive. Ignoring these dynamics may lead to unsustainable business models, particularly in industries with thin profit margins such as retail and healthcare. Companies must balance cost-cutting measures with investments that enhance service delivery and operational efficiency. 7. Mergers, acquisitions, and strategic partnerships. The report notes an anticipated increase in mergers and acquisitions across sectors, driven by the need for growth and operational efficiency. This trend may be overlooked as companies focus on organic growth strategies. Significance: M&A activity can provide companies with immediate access to new markets, technologies, and customer bases. However, the integration of acquired entities poses challenges that require careful planning and execution. Organizations must evaluate their M&A strategies to ensure they align with long-term growth objectives and mitigate integration risks effectively. Conclusion: the projected 25% revenue increase across healthcare, retail, education, and logistics sectors by Q4 2025 reflects a complex interplay of technological integration, evolving consumer expectations, and economic pressures. Recognizing the nuanced challenges and opportunities within each sector is crucial for stakeholders aiming to navigate the changing landscape. Addressing overlooked elements, such as the financial pressures in healthcare, the loyalty crisis in retail, the last-mile delivery challenges in logistics, and the urgent need for digital transformation in education, will be pivotal in shaping successful strategies for sustainable growth. The emphasis on innovation, consumer-centric approaches, and strategic partnerships will ultimately determine which organizations can capitalize on the anticipated growth trajectory effectively. 1. Technological integration and digital transformation across sectors. The anticipated revenue increase across healthcare, retail, education, and logistics sectors is heavily driven by the integration of technology, particularly artificial intelligence (AI) and automation. In the healthcare sector, for instance, technology is being utilized to enhance patient experiences, streamline operations, and manage financial systems more effectively. Retailers are leveraging AI for personalized consumer interactions and inventory management, while logistics companies are adopting automated solutions to enhance efficiency in delivery and supply chain operations. The emphasis on technological advancements highlights a shared goal across sectors: to adapt to evolving consumer expectations and operational challenges, which is critical for achieving the projected revenue growth by Q4 2025. 2. Evolving consumer behaviors and expectations. Consumer behavior is a significant factor influencing the anticipated revenue growth across all sectors. In healthcare, there is a notable shift towards outpatient services and virtual care, reflecting a demand for more accessible and affordable healthcare options. The retail sector is witnessing a move towards personalized shopping experiences, with consumers favoring brands that offer tailored products and services. Similarly, in logistics, the rise of e-commerce has led to heightened expectations for fast and reliable delivery options. Understanding these evolving consumer behaviors is crucial for businesses to align their strategies, enhance customer satisfaction, and capitalize on growth opportunities. 3. Financial challenges and operational pressures. Despite the projected revenue growth, all sectors face significant financial challenges that could impact their performance. The healthcare sector is grappling with rising operational costs, particularly in labor, which are outpacing reimbursement rates. Retailers are contending with outdated systems and increasing operational expenses, necessitating strategic investments in technology and workforce development. In logistics, the need for cost-effective solutions amid rising demand for advanced services poses operational challenges. Addressing these financial pressures while pursuing growth will require careful strategic planning and investment to ensure long-term sustainability and profitability. 4. Competitive dynamics among major global players. The competitive landscape is evolving as major global players respond to the anticipated revenue growth across sectors. Companies are increasingly focusing on mergers and acquisitions to enhance capabilities, expand market share, and foster innovation. In retail, for instance, executives are looking to strengthen loyalty programs and enhance omnichannel experiences to retain consumers. In logistics, partnerships and technological advancements are being leveraged to meet the demands of e-commerce and last-mile delivery. The strategic responses of these players will shape the market dynamics, influencing not only their individual growth trajectories but also the competitive environment within each sector. Understanding these dynamics is essential for stakeholders looking to navigate the evolving landscape effectively. Here are 3 famous historical cases that reflect the dynamics of anticipated revenue increases across various sectors and the responses from major players. 1. The rise of e-commerce in the late 1990s and early 2000s. The late 1990s marked a significant transformation in the retail sector with the advent of e-commerce. Companies like Amazon and eBay revolutionized how consumers shop. Amazon, initially an online bookstore, expanded rapidly into various retail categories, leveraging technology to enhance customer experience and streamline logistics. This shift led to an estimated revenue increase of over 25% annually for several years as traditional retailers scrambled to establish an online presence, leading to innovations in supply chain management and logistics. Retail giants like Walmart began to invest heavily in online infrastructure and e-commerce platforms to compete effectively, resulting in a paradigm shift in consumer shopping behavior that remains influential today. 2. The healthcare boom post-World War II. Following World War II, there was a substantial increase in healthcare spending in the United States, spurred by technological advancements and the establishment of Medicare and Medicaid in 1965. The demand for healthcare services surged as medical technologies improved, leading to a dramatic rise in hospital revenues. Major healthcare providers had to adapt quickly to this new landscape by enhancing their service offerings and integrating advanced technologies such as imaging and surgical devices to meet growing demand. The revenue for hospitals and healthcare systems increased significantly, prompting further investments in healthcare infrastructure and technology to improve patient outcomes, all while addressing rising operational costs and reimbursement challenges. 3. The digital revolution in education during the COVID-19 pandemic. The COVID-19 pandemic catalyzed a rapid transformation in the education sector, pushing institutions to adopt online learning platforms and digital tools at an unprecedented pace. Companies like Zoom, Google, and Microsoft saw massive increases in usage as educational institutions switched to remote learning. This shift resulted in a significant increase in revenue for edtech companies, with estimates suggesting growth rates of over 25% in some instances. Traditional educational institutions responded by investing in technology to enhance virtual classroom experiences and expand their reach to students globally. The shift not only changed how education was delivered but also highlighted the need for continuous innovation to cater to diverse learning needs and improve accessibility. These cases illustrate how significant shifts in consumer behavior, technological advancements, and competitive responses can lead to dramatic revenue increases across various sectors, mirroring the anticipated scenarios described in the provided context. Future outlook: anticipated 25% revenue increase across healthcare, retail, education, and logistics sectors by Q4 2025. As we approach Q4 2025, projections indicate a significant 25% revenue increase across four key sectors: healthcare, retail, education, and logistics. This anticipated growth is driven by evolving consumer behaviors, technological advancements, and strategic adaptations from major global players. Here we delve into the future outlook for each sector, highlighting key factors that will shape their trajectories. Healthcare sector. The healthcare industry is poised for a transformative shift driven by financial imperative and technology integration. Key trends include: 1. Financial health improvements. Net hospital operating revenue is expected to rise by 8%, reflecting a broader recovery post-pandemic. However, challenges such as rising labor costs and reimbursement rate pressures persist as hospitals navigate these financial landscapes. Outpatient services and telehealth are anticipated to grow significantly, with outpatient volumes projected to increase by 17% over the next decade. 2. Patient affordability initiatives. The demand for financial assistance programs is set to grow, with healthcare providers striving to enhance patient financial experiences amid rising out-of-pocket expenses. 3. Technological integration. Investments in artificial intelligence, AI, and automation will streamline operations and improve financial management, ultimately enhancing patient care. The integration of technology is crucial as healthcare systems aim to transform care delivery models to be more efficient and patient-centered. Retail sector. The retail landscape is undergoing a digital transformation characterized by personalized shopping experiences and technological investments. Future trends include: 1. E-commerce growth. The retail industry expects mid-single-digit growth in 2025, buoyed by enhanced loyalty programs and omnichannel capabilities. Retailers are increasingly leveraging AI for inventory management and demand forecasting. enabling them to respond swiftly to consumer preferences. 2. Social commerce. As younger demographics engage with brands through social media, retailers will focus on integrating social commerce strategies into their sales models. This will require a strong understanding of consumer behavior and preferences to build effective engagement strategies. 3. Operational challenges. Despite growth prospects, retailers face challenges from outdated systems and rising operational costs, necessitating strategic investments in technology and workforce readiness to maintain competitiveness. Logistics sector. The logistics sector is on an upward trajectory driven by the expansion of e-commerce and the demand for advanced logistics solutions. Key factors influencing this growth include: 1. Market expansion. The logistics market is projected to grow from $301.1 billion in 2024 to $557.1 billion by 2030, indicating a compound annual growth rate (CAGR) of 10.8%. This growth is attributed to the increasing need for efficient logistics solutions catering to the e-commerce boom. 2. Technological innovations. The integration of automation and last-mile delivery solutions will enhance operational efficiency. Logistics providers are expected to adopt smart technologies that optimize supply chain management and improve customer satisfaction through seamless delivery experiences. 3. Omnichannel strategies. The shift towards omnichannel retailing creates new opportunities for logistics providers as they adapt to meet the diverse needs of consumers. Ensuring quick and efficient delivery will be critical to maintaining competitive advantage in this evolving landscape. Education sector. While the education sector's insights are less pronounced, trends indicate a significant shift towards digital transformation and personalized learning experiences. 1. Technological advancements. The sector will increasingly adopt technology to facilitate personalized learning, catering to diverse student needs. This includes the integration of online learning platforms and digital resources to enhance educational accessibility. 2. Investment in digital infrastructure. Educational institutions are expected to invest significantly in digital infrastructure to support remote learning and hybrid models, ensuring that they can adapt to changing educational demands. 3. Focus on student engagement. As the education landscape evolves, institutions will prioritize strategies to engage students effectively, fostering a more interactive and personalized learning environment. Common themes across sectors. Across healthcare, retail, logistics, and education, several common themes emerge. 1. Technological integration. The integration of AI, automation, and digital solutions is a recurring theme across all sectors, emphasizing the need for organizations to modernize their operations and enhance customer experiences. 2. Consumer-centric approaches. The focus on consumer experiences, whether through personalized interactions in retail, enhanced patient financial experiences in healthcare, or engaging learning environments in education, is critical to driving revenue growth. 3. Operational challenges. All sectors face pressures related to rising operational costs and the need for strategic investments to adapt to evolving market conditions. Organizations must navigate these challenges to remain competitive and sustain growth. Competitive landscape. Major global players across these sectors are responding to these anticipated growth trends with strategic adaptations. Companies are expected to invest in technology, enhance customer engagement strategies, and explore mergers and acquisitions to strengthen their market positions. The competitive landscape will be shaped by organizations that successfully leverage technological advancements and prioritize consumer experiences while addressing operational challenges. Conclusion. The projected 25% revenue increase across healthcare, retail, education, and logistics sectors by Q4 2025 reflects a complex interplay of technological integration, evolving consumer expectations, and the necessity for strategic adaptations. While challenges remain, particularly regarding operational costs and outdated systems, the emphasis on innovation and consumer-centric strategies is expected to drive significant growth in the coming years. As organizations navigate this landscape, their ability to adapt and respond to market dynamics will be crucial for achieving sustained success.